As we said, stocks a bit mixed here. Yields continue to trend a bit higher, approaching some of those one-year highs that we touched last week. Jeffrey Solomon joins us this morning, Chairman and CEO over at Cowen, talk about all kinds of asset classes. Jeffrey, good to have you back. Happy Friday.
Good to be here. Nice to see you all.
Does it feel like last week's rate scare is getting a little less scary over time?
Well, I like to think about things in terms of throwing rocks in the pond. So the first time the market wakes up to the fact that rates actually do go in both directions, it has to adjust collectively. And certainly the big move in rates over the last few weeks was another rock in the pond. And so, the more that people get adjusted to the fact that, we're going to have a reflation trade here as people start to come back to work, the vaccines are kicking in, we have a huge stimulus coming, you would expect rates to move in that direction. It's just sometimes it happens in fits and starts, and it causes the market to have some indigestion.
Looking at some of the growth expectations for GDP in the coming quarters, I mean, you're generally looking somewhere in the high fives for Q1. Some have Q2 at 11, 8 for Q3. Are you seeing any reason to doubt some of these multi-decade high estimates in GDP growth?
Well, we're coming off such an unprecedented year in the year 2020, where we'd seen it to the flip side. So I tend to look at smoothing things out over the long term. I do think there'll be a reversion to the mean. Obviously, if you just look at really big numbers like that, if you're coming off of much lower bases, it would be when we return to what would have otherwise been a normal, smooth GDP growth without the virus. Those are numbers that are totally achievable. I don't know if they're going to be that dramatic, but over time we will, resume economic growth. I mean, it's going to happen. And so, again, I'm not know that I'm smart enough to know whether or not it'll happen in the, that way, or it'll happen over an extended period of time. But we're going to reflate, no question.
Yeah, Jeff, I'm curious. I mean, we've had so many conversations with you really over the years about technology, innovation, longer term, what those types of opportunities are going to mean from an investor standpoint. Given the fact that we are seeing this kind of broad-based shellacking of tech stocks, those momentum names, some of those growth stocks right now, I mean, what's an investor to do?
Well, I think you have to look at longer term trends. Anytime, there's two ways to look at the shellacking that occurs. It's a better entry point, certainly, if you're thinking about long term. In areas like biotechnology and sustainability, the investment in tech infrastructure, cybersecurity, all of these things that you all talk about all the time, which are very real in terms of, the needs of the economy in this new world in which we live. You can make investments in those. I'm not one of these folks that thinks that just because of a few weeks of a rotation into value away from growth, that all of a sudden the growth trade is over. It is not over. Let me just say, I think that the amount of money that is sitting on the sidelines in the private sector and in the public sector to invest in meaningful growth areas that are disruptors, like sustainability, like biotechnology, like AI and cyber, like reshoring our entire supply chain because of what's going on with China. There's a ton of places where people have to invest in the future of our gross domestic product here in the United States. And so, a month of, turmoil doesn't dissuade me from making sure that I have my portfolio allocated in those areas.
Shepard Smith here. Thanks for watching CNBC on YouTube.